Imagine a future where anyone can be their own power provider. That's the reality that Bloom Energy CEO K.R. Sridhar set out 16 years ago to create. Now, he's selling that story to public market investors. Bloom Energy just began trading on the New York Stock Exchange Wednesday morning.
We have a very simple value proposition. Number one, we are more reliable and resilient than the grid. Number two, we are cleaner than the grid. Number three, we save them money.
Bloom sells what it calls energy servers. They're customizable systems that generate power for customers like Morgan Stanley and AT&T without the need to connect to a power plant. These high-tech boxes run on natural gas or biogas 24 hours a day, 7 days a week. In the past 5 years, only 1% of American IPOs have been alternative energy companies, and it's been a year and a half since the last one went public. Clean tech had been riding a popularity high on the tail of the more than $100 billion the Obama administration piled into the industry. Under the Trump administration, enthusiasm for the space has faded, along with many of the government tax credits and other incentives for clean tech. Yet the reinstatement of an investment tax credit for fuel cells in the massive tax overhaul bill worked in Bloom Energy's favor. The cost of fuel cell projects has also declined as the systems have become more efficient. For years, Bloom had been racking up a huge deficit totaling $2.3 billion, but the company's financials are finally turning a corner. In the first 3 months of this year, revenue quadrupled compared to the same period in 2017 to $121 million.
The world needs reliable electricity. We've gone from a mechanical age to a digital age, and we are a solution.
An alternative energy company that's inching closer to profitability is a reality that public investors can get comfortable with. Barinka, Bloomberg News, San Francisco.